All right.
Hey, it's Water Cooler Wednesday. Water Cooler Wednesday.
Yes, 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 yes.
Hi, everybody.
Hey guys. Hey. It's another Wednesday. Water cooler Wednesday.
Wednesday.
So we are so excited to come to you another week of topics about real estate, buying your
Everything real
home.
estate.
Yeah,
Yeah,
buying, selling your home, anything that can help you within any type of real estate transaction. Those are the type of topics we talk about, right?
we
So
do.
yeah, we want to make sure that our clients are educated and aware of topics that are happening within the market. And so today we're gonna actually talk about the medium, was it the minimum credit score?
Minimum credit score for mortgages in 2025.
Right. So this is a very important topic that you guys want to know about, because a lot of times we get people that are interested in buying a home, and really the first question I normally ask is, have you had a chance to speak to a lender? And so the reason being is because, yep, that's her over there. Right, can't do anything without a lender, right? Like we can look at the houses. Like I think today I was talking about the other day I was talking about scrolling on Zillow and
Oh,
Redfin.
yeah, yeah,
Right. So we want to get
yeah.
off of Zillow and Redfin and just keep and scrolling along. We want to do some things. And so in order
That's
to get
right.
started, right, we have to get your you have to start with your application, right? And then
Yes, ma'am.
and so I send you over to Lisa so Lisa can she'll give you some information, but in the end we need your app. And so
Yeah.
in that app, a lot of people ask, ma'am, do you have to run my credit?
Yes.
Right, right. It's all the time. That's the question. Do you have to, is it a hard pull or is it a soft pull?
Mm-hmm.
Right. So
Yeah. Gonna be
those
a hard pull if you're
right,
ready to buy.
right. So those are the things that we have to definitely do in order to get you there. So today let's talk about where you need to be. That credit score. What's that credit score, Lisa?
But before we do that, let's introduce Dion Branch
Oh,
with Allure Dream Homes,
it's
powered
me.
by.
Yeah, broker by EXP. Allure Dream Homes, broker by EXP. My name is Deanne Branch, and I'm so happy to be here today.
And of course, I'm still here co-hosting. I'm Lisa, and I'm from Nexa Mortgage, the house money mama. And I'm at the place where brokers are better, so we can give you all the options that you could possibly hope for in mortgage lending.
Yes. All right, right. Yay. So now you know who we are, and you'll definitely get to know us better every time you join us every Wednesday. So we're so happy for you to be here with us, right?
Yeah. So we actually were talking about this a few days ago, Deanna, and I thought you had a really good idea, which was, next week we're going to have our favorite credit restoration specialist coming on so we can interview him and he can give us some information, all the inside nuggets and everything about credit restoration. All things credit is going to
Yeah.
be next week because he's a specialist. I'm the mortgage specialist. Dion is a real estate specialist, but Maurice, he the credit specialist.
Yeah.
So we'll be talking about that next week. So this is a good segue into that because obviously with different mortgage loans, mortgage types and things like that, there is going to be different requirements, depending on what kind of financing you'll be looking at. So we want to talk about that tonight, the different minimum scores that are going to be required in the year of 2025. And then also to kind of go along with that, we want to talk about a few other things too that are going to be important when you think about different types of financing. So like Dion said, that is a big question that we usually get in regards to what does my score have to be? Do
Yeah.
you have to run my credit? Well, yes, I already said that. I do have to run your credit. It's going to likely be a hard pull. Uh,
Yeah.
there are some instances when I can do a soft pull, but typically that's not going to be if you're ready to, jump in the game and get out there and actually buy a house. I do have to do an actual hard inquiry. There are differences between hard and soft pulls, so that's one thing to keep in mind. And one of the things we like to do, we practice what we preach. So
Hmm.
we talk about being prepared and everything. So we don't want to halfway know what we're dealing with.
Right.
We want to know from the beginning what the actual situation is, because then that allows me as a lender to be able to put together and craft a scenario that will work for you as the home buyer, and then that helps to empower Dion as the realtor to be able to find the best place for you. So
Yeah.
it
Yeah.
all kind of works together.
Yeah.
Um, a lot of times people know mostly about FHA loans, conventional loans. Most people don't really talk too much about USDA loans, and that's not really big here where we are in this particular area. And then some people, if you're a veteran, you may know about veteran loans, or if you know a veteran, then you may have heard that there are VA loans for those who have served. So let's start with conventional. Because that's always what I hear. FHA and conventional. What's better? What's better?
Right.
FHA
Right.
or conventional?
Can I go conventional?
Can I go conventional? Exactly. Well, it depends. I think Dion can tell you, she's heard it enough now. She can tell you, what do I say about conventional financing?
Right. Um,
It's very,
it conventional is less forgiving, right?
there you go. It's
Right.
very unforgiving.
Is right, right. So a lot of times people want to go conventional because as a realtor, there are a lot of properties that might need some repairs or small changes, small fix, and so they want to go conventional because of that, because they could purchase and those homes will still be okay, approved by a conventional loan.
Hmm.
So that's why they want to go conventional, but can't all the time because maybe you haven't been doing all the things you needed to do.
Right. And conventional is very unforgiving. And sometimes it's not even that you haven't done, because it's that as well. But sometimes it's not even that you haven't done what you were supposed to do. But sometimes it's that there were, like, say for example, I've had some people in the past where um, they took ill, and during the time of their illness, their income was cut. And because their income was cut, now they had some issues with being able to
Hmm.
keep up with payments, or they ran up, credit card debt like unbelievably,
Yeah.
high. And so, this is the first nugget I'll probably give you about credit is that a higher utilization ratio means a lower credit score. So when you get your ratios for utilization high, which means that utilization basically is like it sounds, use. It comes from the word use. And so it's how much of your credit that you're actually using. And when you use a lot of it, credit bureau doesn't like that.
Yeah.
And so you have it high, so they take your score down low. They have a, what is that, an inverse relationship?
Yeah. Yeah. So,
So that's one thing to keep in mind. And when things like that happen, obviously now that's going to reflect on your credit report. And so conventional finance is like, you had issues with your credit, you had collections, you had late payments, they don't care the reason. They just care that it happened. And unfortunately, if it happened, like I mentioned earlier, they're very unforgiving. And so sometimes when you have certain credit issues, even if it's been a year or so, afterward, and you've kind of got back on the wagon, if you will, but they still conventional like, nah, we'll pass. What's
Yeah.
Simon Cowell? It's a no for me. That's conventional finance, and they'll be like, it's a no for me.
Right.
So
So what's
so
the
yeah,
score that to get conventional? Is there a score or is it just
yep,
that
yep,
all the, looking at the history, it sounds like it's both, like score and
it is.
history. Mm-hmm.
Yep, that's a good way to say it because you do have to you have to take both things into consideration. So there is a minimum score, and typically that's going to be 620 across the board. If you want conventional finance, and usually they won't go below a 620. There
Okay.
have been some exceptions for some lenders that I've seen over the past probably 2 years, but it's very, very rare that you could just think of 620 as being your bottom when it comes to conventional. If you're lower than that, then more than likely you're not going to be able to have conventional financing.
Yeah, yeah. But it's I guess I've heard, we've had clients that said, "Oh, my score is like 700 or, or
Mhm.
higher," and want to know why they weren't approved for conventional financing. And you're like, you know,
Well, we could transition that into the next type of financing that I was going to talk about anyway. And I can tell you why. Most of the times it has to do with their debt to income ratio. The debt to income ratio is a little bit different than the utilization ratio.
hmm
So the same way that conventional is very unforgiving with credit, well, we transition to another type of financing. It's the second type of financing now, FHA. FHA is pretty forgiving. They're pretty liberal with their forgiveness when
yeah,
it comes to your credit. So with FHA, they allow you some leniency. So for example, with conventional, you can only have a 50% debt ratio. It can't go any higher than 50%. Well, with FHA, it's different. You can go up to 56.99% on the back
okay,
end ratio for your debt. So a lot of times when people say, well, why couldn't I go conventional? Well, it might be because with conventional, you was only going to be able to buy a house that costs maybe, I don't know, 250,000, and you really need to be more in the realm of 285 or 300. And so by us taking a different type of financing, FHA instead, because
hmm
the back end ratio is higher, that may allow you to be able to get, finance that way instead.
okay, all right,
So a lot of times that's what happens when you have people, their credit is decent, marginal, or even good, whatever, but because they have a lot of debt, that
hmm
unless they planning on paying that debt off, sometimes that's the better option to
right.
take.
And sometimes I think we've even came across that FHA might been a better bet. Just period. Maybe the rate was a little lower, things like that too.
Oh, a
Two
lot of
sometimes.
times the interest rate is going to be lower for FHA. A lot of times I've noticed that it used to be the reverse. Traditionally, the interest rate for conventional was actually more competitive.
Mm-hmm.
But I would say probably over the past at least 6 to 8 years, maybe even longer, I have to think about it. But FHA and the government loans have usually kind of found themselves at the on the more competitive side of the interest rates. That's what I've
Yeah,
been seeing.
yeah,
So like
yeah.
right now, for example, if I give you somebody who same person, same exact credit scenario and everything, and I have the option to take them conventional or the option to take them FHA. Let's say somebody with about a 640 score, a 640 credit score to mid score. So just the estimate, this is not going off actual today's rates, but this is just a
Mm-hmm.
scenario. So
Right.
like maybe today the interest rate for conventional would be a 7.25%. And that same exact scenario going FHA would be a 6.75%,
Yeah, yeah.
or maybe a 6.9, somewhere around there, but probably I would say probably 6.75. But yeah, there is different.
Yeah. And
And
so, although we're talking about credit and getting your credit score and a different type of finances, sometimes
yes.
it just works better for different programs, right? Based off of um, just where the market is, or
Mhm.
your rate, your debt to was it debt
Debt to income
income
ratio.
ratio, debt to income
Right,
ratio. Right. So there's a lot of different factors that play in. But we want to make
right.
sure we keep talking about the credit score.
Right. And I'm glad you brought that up though, because really that's one of the reasons why, because I want to hammer in on something else that we a lot of times have to end up kind of coaching our customers on, which is that don't take advice from a layperson. Because all these different factors that we're talking about, this is only the tip of the iceberg, if you will, when it comes to evaluating and analyzing a file. So when you say, oh, well, my cousin said that
Yeah.
she was able to do this, 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 and this. Well, sorry, boo boo, that's your cousin, but that don't mean that's gonna be you
Right.
because
And what's happening in 2025 is different than what happened in 2020, or
mhm,
when our parents bought their house in
in
1970.
1985, right?
Right, 19, right, 1980.
Exactly,
Right,
right.
right, whatever. So, and we say this because a lot of parents want to help their children with,
Yeah,
advising on buying a house, and, friends and family and things like that, but they're not the professionals. We are. So,
right.
definitely
Absolutely.
make sure you talk to us. So,
And even though it's not a ton of changes that happen, like as far as your qualifying type of criteria and things like that, however, whatever changes happen, we're going to be aware because
mhm.
this is our field, this is our industry. So this is what we, kind of hate to admit it, Dion, but we in this thing.
Right,
We
we signed up. We signed up for this. Right.
So we knee deep in it. So we
Right.
live in, we eat, and we sleep in real estate,
Yeah.
and we do know what's going on within the industry. Now, I talked about things that haven't really changed. So FHA, actually, the minimum credit score for FHA for a lot of places, well, maybe I shouldn't say a lot. For some places, let's say it that way, because I'm a broker, so I have a lot of options. But for me, a lot of my lenders will do an FHA loan down to a 580 credit score, the minimum credit score. So I do know of other lenders, like mortgage bankers and things like that. They will actually do the credit score only down to a 620 or sometimes a 600. But really, FHA guidelines and most lenders that just follow guidelines, like the ones that I work with, they will go down to a 580 on the credit score. So VA is probably about the same. So remember, I mentioned that so we're transition to a third type of financing. I did mention about how if you're a veteran, there's a specific type of loan for you called a VA loan. Now, what I love about the VA loan, um, they're even more forgiving than FHA.
Hmm. Yeah.
and and honestly, I think that's a really good thing because a lot of times our veterans come back, maybe serving a tour of duty or, they were in for so long. And sometimes, these people have gone through a lot. I don't think that military it's not as hard as it used to be, but it's still not easy either.
Yeah.
Um, but a lot of times they come back, it's difficult for them to get jobs. Sometimes it's difficult for them to get work. And a lot of times they haven't really been working on their credit. So, because they've been focused on whatever their military responsibilities are. So I do like the fact that they're very lenient when it comes to veterans credit. They basically want to help them be able to get into a home. They don't have the same kind of restrictions, like the whole like for us, it's FHA and conventional, you have to show that you've been on your job for 2 years and your credit has to be a certain amount, stuff like that. You don't have to do that. And VA loans, if you have enough entitlement, is going to be your 100% loan. So there's no down payment requirement. And
Yeah.
and you also don't get PMI.
Yes.
So for those who don't know what PMI is, PMI stands for private mortgage insurance. And private mortgage insurance, the way I like to explain it, is basically it's like like an insurance policy. You think of it that way. The same way you have on your car or your house. If you got into a car accident, then you pay the deductible, and then from that deductible, now they make the repairs on your car. They don't buy you a new car. They just restore you back to being whole, by being able to compensate for whatever damages have been completed. Well, same way on a mortgage. So PMI works like this. The reason FHA is able to be so lenient, the lenders and the investors, is because if you were to default on the loan, the PMI, they can now go and basically cash in that policy and say, hey, this borrower defaulted on the loan. And so then they, I guess you could say, do a claim,
Right.
and from that claim, they're able to be made whole and still be able to go out and lend more money again.
Okay. All right.
So with the
Another
with
good
the
thing.
veteran, let me just clarify this too. With the veteran, they have the same privilege that a PMI, like a private mortgage insurance policy, would give you, but they don't have the monthly payment that goes along with it. So there's no PMI on the loan. It is a guaranteed loan. So if they were to default, then the government does step in to help make the lender. The veteran doesn't have to incur that cost. So there's no PMI on their loan.
Okay. All right. One good thing about VA loans as well is, and it's really not the loan, but it's veterans purchasing homes, is I think about their taxes as well.
Oh
So,
yeah.
right, whereas if you have so much of a disability, uh,
Mm-hmm.
your percentage rate,
70%.
right? How much did you say?
70%.
70%. Yeah. So
Mm-hmm.
then they would not have to pay taxes at all, right? 70%.
Correct.
Mm-hmm.
Definitely in the state of Illinois. I don't know that it transfers to every state, but I know for sure in the state of Illinois, it's not a requirement to pay real estate taxes, property taxes on your primary residence if you are a veteran who is 70% or more disabled.
Yeah. So that's definitely a great benefit, especially during this time right now where taxes
Ooh,
are a little
Jesus, the
property,
taxes.
right? It's a little high. So
A little.
just a little bit, a little high. So
Yes,
in
I
the
know.
suburbs, mind you, right? The city is still
Right.
city is reasonable, but I still have those clients that don't want to go. I know, no, I don't want to go to the city. I don't want the city, but so, but
Yeah, that's how it
that,
goes.
right.
But
So
yeah,
that,
that's a very good point because I think people don't always know that that's an option, because we talked about that a little bit when Nancy came on, a
hmm
few weeks ago. But that's definitely an option for people that if they have that 70% or more of disability, and usually you can find out by looking on your certificate of eligibility, or usually people just know, but they have to put it in writing, so they'll show it to you on your paperwork.
yeah, yeah. So, all right.
So I know we talked about basically three different types of financing. I don't really want to delve too much in the USDA only because we don't really cover it too much. USDA, we do have USDA financing, but it is primarily for rural areas, or so let me say, because I don't want you to think when I say rural that means you have to live on a farm. That's not what I mean.
Mm-hmm.
But there are areas that are designated rural. So like for USDA, usually what I do if I have somebody that I think may qualify, then one of the first things I do is I go to the USDA site for USDA loans, and I'll check and see on the map if the area that they're looking in is deemed, rural or semi-rural,
Right.
because then you can utilize the USDA loan there.
When I think of rural area, I kind of think of Manhattan, Illinois, because yeah, it's like past Frankfurt, Mokina out that way, but a lot of new
Okay.
development is starting out that way. But
Okay.
it is, there's a lot of farmland and things around it where,
Okay,
so,
it
so
probably is then. It
right.
probably
So,
is, it would probably be a good place to market a USDA loan.
mm-hmm, So there's depending on where you're thinking about purchasing, there's definitely a lot of options.
Oh yeah, oh yeah. And since we, talking about the minimum credit score and everything, just a few things to keep in mind, I think would be good, to remember that there are some things that can impact your credit. I know this is really going to be discussed more next week when
Yeah.
Maurice comes on, but just to keep some things in mind, late payments are probably the biggest thing that have an impact on your credit score. Those late
Mhm.
payments. You can have some really big derogatory stuff too, like bankruptcies and foreclosures, deed in lieu, different things like that. And a lot of people don't know. I talked to a gentleman, he was my Uber driver actually. So we were talking about mortgages because he and his wife are planning on buying a house in next year, sometime next year. And so we were talking about, he said that somebody offered him to do a debt consolidation. And so I
Mhm.
explained to him that really in the eyes of a lender, a debt consolidation is not viewed any different than a Chapter 13 bankruptcy.
Oh wow.
Hmm. Yeah, it's considered that severe. So, keeping something like that in mind now, usually the damage to your credit is probably already done, by the time you get to that point where you're considering a debt consolidation. But it's good for you to know. One of the things that he kept saying was like, I learned so much from talking to you during the ride. I really appreciate it. He says nobody ever told me this. Nobody explained this to me. So
Mhm.
um, I do think it's good for people just to know. If you're not sure about something, that's what we're here for. That's why we come on every week, regardless of how
Right.
we feel. We still make sure we come and put together something for you guys, so you can build up, a library, be able to come get your questions answered. You can call us, you can talk to us, you can present us scenarios, and then we can kind of forecast and troubleshoot with you and say, okay, well, look, here's how we can strategize, to get around whatever this issue is. We
Right.
have enough experience combined that, we usually everything is, my word is figure outable.
Right. And Lisa let you all know we even educate in the Uber car.
Yes, on the Uber ride.
On the Uber ride. So wherever we are, and there, you know what, we have lots of friends and family that ask us questions all the time, and that's
Yeah,
what we're here for, to help you. Make sure that you do the best transaction for yourself and your family.
yeah,
So
yeah.
we want you all to be successful. So
Absolutely.
all
So
right.
keeping those kind of things in mind, that when you do a debt consolidation, that is pretty much the same as a Chapter 13 bankruptcy. Also keeping in mind, collections and charge-offs and things like that. Those are going to come up pretty severe and, hurt your credit. So I know next week we'll be talking about credit restoration and everything, so you can get kind of, more of this addressed and everything at that point in time. But I just wanted to mention it today because it still all ties into your credit score,
Your credit score. Right.
and a
And
lot of
when
times people think missing one payment is not a big deal, but it really, really is. And what I mean by a missed payment or a late payment, I mean 30 days.
yeah.
So like if you're able to get the payment made on day 25 or, or day 15, don't freak out about it. That's okay. It might cost you a little bit more because they're probably going to charge you like a late fee or something like that. But as far as the damage to your credit, that isn't something that you would have to be concerned about. But you definitely want to be concerned about and watchful and mindful of having 30, 60, and 90-day lates. Those
Okay.
those are very difficult to get past.
Yeah. Yeah. All right. And we'll talk to Maurice about it too. Just even the thought of how long does it take for all these things to get off your credit and how to
Oh
get them
yeah.
off. So Maurice
Hmm.
is going to educate us tomorrow, like after you
Next
maybe.
week.
I mean, sorry, next week. I want it to be tomorrow, but it'll be
Right.
next week. Right. So, but next
We
week.
so excited. We can't wait.
Right. I'm like, right. So yes, on March 26th, I believe that he'll be with us. Is that right? On
March
Wednesday,
March 25th.
25th. Wednesday.
Uh-huh.
Wednesday. So So this week we're here for you to educate you on the minimum credit score. All right. So we're so excited to come to you all every week. And if you need any information, Lisa
Here
is here for you.
I am.
She'll be able to run your application and give you an idea of how your credit is going, and if you qualify for a home. And then my name is again Dion Branch, and I can help you purchase the home as far as looking for the home and finding and negotiating on your contract. All right. So we
All
want,
right.
yeah, we just want
Another
to say,
water cooler Wednesday. Thank you
right.
all for coming. We really
Thanks for
appreciate you
joining
spending your
us.
time.
We're excited for you all every week to come here and join us. So
And
bye.
tell your family, your friends, subscribe. We want to have more and more and more people come. The more people we can educate, the more people we can help, the better off we all will be.
Yes, yes. See you later.
Bye.